Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, the first trading day of 2008. Well, today's January 2nd, folks, and I hope everyone had a wonderful New Year's. I had a very nice New Year's here in New York. A little chilly here today, but what can you do? In any case, looking at the charts today, we're going to find some very peculiar things going on in the charts, and I'm very interested to show everyone the technicals side of things. Those of you that have been with me for the last few videos and following along know that we said the technicals are looking very bearish as of the close on Monday, which was the day before New Year's Eve. And I mentioned how, while the technicals were showing a lot of downside coming, which we did get today, by the way, the technicals definitely don't lie, and that's one of the beauties about technical analysis. Companies can lie, people can lie, technicals don't lie if you read them correctly. But on the other side, I said the sentiment indicators I like to follow are showing some various possible, maybe a little too much bearish side to the market. Everyone's expecting a fall here in early January. And it's very important to realize that, when too many people get bearish, you sometimes get a very near-term bounce to squeeze some of those weak hands out on the upside. And then once it bounces a little bit for a day or 2 or 3 days, or a short-term bounce, then you get another move to the downside even bigger once all those shorts have been taken out. And so the question is, we've seen the move down here on the technicals. The question is, going forward, do we have a possibility of a near-term bounce coming? And I'm not talking about a big bounce here, and I keep saying that, but it's very important to understand. I'm not calling for moves to the highs. I'd be shocked if that ever happened. But what I am talking about is a day or two of an up move in the markets where people say, okay, maybe things aren't so bad. Okay? Maybe there's this data coming out. Maybe that shows okay. Well, today the data was ugly. There's no doubt about it. The data scared the market today, the economic data that came out, and it continues to look very bearish for the markets overall. And here's the Nasdaq chart, and I want to show you a few things here. And what I'm going to show you here, folks, is this is the Nasdaq chart, the daily chart. So this is what's happened basically for the last 2 to 3 months. Going back to here's October right here, so even a little bit before October, but here's October, November, here's the fall in November where we came down to this low. And I'm just going to draw out a few lines here so we can keep track. Okay, and then you have the close on Monday right here on New Year's Eve. Now the question was, we closed below the 20 moving average, and the question that I posed to the video viewers, all you guys, is, well, we have to look to see, do we confirm this move down today, and which we did obviously in this move down, and what do we do? Do we go to that 200 moving average right here? Because the 200 was the next area of support in the market. Okay? So the question was today, where do we close? Now, we sold off hard today. The Nasdaq was down 50 plus points for much of the day, and the Nasdaq ended up closing down about 42.5. Okay? And the question then becomes, well, once we're trading in this area, especially when we were down 50 plus points, is do we close below the 200, and do we look for a confirmation move tomorrow below the 200 for another sell-off all the way down to these lows? Now, there's going to be two areas of support in this market. This is number one, underneath the 200. I'm talking about underneath the 200 here. Number one is this line I just drew in. Number two is this line. Should we break those, then we're probably going to the August lows. But that's, again, looking farther out. Now, it could happen in a few days, but it's likely not going to happen tomorrow unless we have a major issue. So let's focus in on the near-term lines. Number one, the markets have a way of always closing like a choreographed dance, like a beautiful dance or a beautiful maneuver that's very well choreographed. And when we were down below the 200, it was a question of, do we close below the 200 or above the 200 today? Do they bounce the market back above? And just like a beautiful choreographed dance, we closed basically right smack on the 200. Well, what does that mean? Well, technically it's not a breakdown below the 200 because you're right here, where my mouse is right here, on the 200. So you can't say it's a breakdown, but at the same time you have to consider it holding, but it's not a very strong hold. You closed right on the line. Now, does this mean that we bounce tomorrow? Do we go lower? We'll have to find out. But essentially, what's kind of ironic about it and what's so interesting is that they closed it virtually on the 200 moving average on the Nasdaq, on the daily chart. So now we have to wait for tomorrow for the next piece of the puzzle. But in the near term, we do know our support areas here, right here now, all right, and right here. Now, obviously, the support area we're on right now is the 200, so that's number one. So number one is where we are now. The closing price on the Nasdaq is virtually the 200 moving average, which is the support. The next point would be here on the downside and here. Now on the upside, obviously the 20 moving average is probably the nearest support resistance level in the Nasdaq chart. All right, so we're going to have to focus in on these charts and find out where we go tomorrow, whether or not we confirm the move down today and go lower and close below the 200 tomorrow, or do we bounce back up tomorrow? Now, the economic data was not pretty today. There's a lot of negatives out there. I think people are worried that earnings are coming out soon and they're going to be very weak. They're worried about retail sales. They're worried about the housing crash, which is going on right now, which is not getting prettier, by the way. As I said in multiple videos, I don't see us even bottoming out in the housing market until 2009, early 2009 at the earliest. It's just too much to go down. When you have a run-up for the last so many years in housing prices, and it's hundreds of percents in some areas that these prices have doubled, tripled, you have to take at least 30% out of those, and I do believe in the biggest run-up areas, a minimum of 30% will come out of those prices. Now, again, that's just my speculation, so take it with a grain of salt, but you know, that's how I feel and how I look. Now, let's look at the ES Futures intraday chart, because today it was just pretty ugly, but we did form an interesting start of a pattern here. All right, first of all, we gapped up. Now, that's number one. So we gapped up early today. Now, initially, we sold off right around 9:30. Right at markets opened, we sold off. And you can see here, we came all the way down here. We bounced back up. We came back lower, which I love to see. I love to see a lower low for a double bottom, and then a rally back off that. And then we moved back up here. Now, this is a possibility of a little W pattern forming, so it's kind of interesting to note that we did rally into the close here as the Nasdaq was new lows right about 3 o'clock here. Was at new lows, and on the ES futures as well, SPY, QQQQ, and the rest of them. All right, let's quickly look at the SPY, and then we're going to get into a few odds and ends here I want to touch on. Same intraday chart on the SPY, on the QQQQ, same intraday chart as well. So you see a nice little bottom on that QQQ here, and this is going to be what we're going to watch, all right? In my opinion, this is going to be the support level right around that 200 moving average on the various charts. We'll have to see if we break lower. But remember, tomorrow on the daily chart, you have to look for a daily close. So just because we break down lower than yesterday's or today's low tomorrow doesn't mean we've broken down. You got to wait for that close tomorrow to find out exactly. Because I've seen way too many times where we're lower most of the day, and then the last 10-15 minutes of the day, they spike us up, save the market. So keep that in mind, folks. Now, one thing of amazement, or not so much amazement, is oil. And I'm going to look at the USO here. We'll look at the daily because that's really where you're going to see it. But the oil was up $3.30-ish or so, 40 cents, $3.50, somewhere in that range. A monster move higher. And if you guys remember, I'm not sure if it was on the 31st video or before that, but I did say that I felt that oil within the first week or two of the year was going to go through $100, and it looks to be right on the point. It actually went through today. It touched $100 plus at one point during the day, but it did not close. I'm talking about a close above 100. Too many times I've seen this trading pattern where we got almost there about a month ago, then we pulled back. Then usually the next time up, they take out that even number, push right through before pulling back underneath. So I do think that at some point in the very near future, we will be above $100 at a closing price. All right, folks? So again, some interesting things going on in this market, and I'm just going to quickly look at the SPY here to talk about a few other things. First of all, in the SPY, it's not as pretty a chart as the Nasdaq, and the Nasdaq's been stronger, obviously, and that's why you have all the moving averages up here. You have the 200, the 20, and the 50 above the market. So one thing of interest, though, on the SPY, and this is going to coincide with the S&P chart, by the way, folks. All you that aren't aware of that, realize that the SPY chart coincides with the S&P chart. One thing I do want to point out here, while the Nasdaq hit the 200 today and closed on the 200, the SPY or S&P hit a double bottom. All right, look at how these bottoms here this is today right here, and this is going back to I believe 12/18. So that's December 18th. We hit basically the exact same low and then bounced off that low. So again, this is the support area. This line right here I've drawn in, which is, let me see if I can get an exact price on that line here. 143.85-ish to 90 on the SPY is that area. So again, that's the new level we're focusing on the daily. Do we break that, and do we close lower tomorrow than that level? And if we do close lower, do we confirm the move the following day on Friday will be the key here, all right? And so there's a lot of key levels that we're right up against. Ultimately, as you guys know, I'm a big believer, and I'm not a bear or a bull. I'm a trader. I just want to trade whichever way the market's going. That's why we call bounces. We play the bounces. We play the sell-offs because we want to make money both ways. You can make money as a trader both ways. you can have a portfolio that takes advantage of that. You can always come join us in the chat room. We constantly are doing that, whether or not we're playing the QID, which is 2 times short the Nasdaq, or whether or not we're going long small caps or this or that. It doesn't matter. As long as there's money to be made, we're going to try to make it either way in the market. All right, folks. Other than that, keep a watch of oil and a close above 100. Keep watch of the key levels here for the SPY. On the upside, you can look for a possible bounce. If we do get that sentiment bounce, which I've been talking about, which I wouldn't bank on but it's possible. The odds just aren't good enough for a play either way, in my opinion. I'm really not index long or short at this point. I'd rather wait to see if we break lower or break up according to these levels that I talked about. And that's, again, just my personal opinion and my personal position. All right, folks, so watch these levels. Have a wonderful day. We'll be back with more videos in 2008. Come join the website at inthemoneystocks.com and email us with questions. Have a wonderful evening. Take care.